Hello everybody and welcome to this video. So I will be showing the two-step model, which is a free, simple trading model that works for beginners. I have been doing a series of videos all based around gold. I will include the links to all of these videos because they explain my logic on a day-to-day basis. So first, let me quickly run through the two-step, which is just two parts. You need a directional leg, and then you need a retracement leg. That's it. No indicators, no overcomplicated strategies. Now, the biggest problem with this model will be deciding when to engage. You know where to engage, which is always point C. The question is when to engage. So I'm looking at the 20-hour time frame because it works best to explain the model. And I'm going to show you the model sequence, just the steps, just so you understand what I'm doing and what I always do in all the videos. So step one is that I just find range one, which is always the longest, not the fastest, but the longest range. Step two is I'm looking for price to run back inside that range to the 50 or 70% fib. Yes, you can use other fibs, but it's a bit more advanced. For simplicity and for beginners, it's the 50 to 70. Okay, so that box that it creates. Then I wait for a reversal, so I'm watching a lower time frame. At that 50, 70 fib, which is point C, I am looking for SMT and an overlap with a fair value gap. And then my targeting is by default 100% of the initial leg, which is range one, which is my A to B leg. That's the model. Now let's talk about what I have been referring to in the previous videos. So I currently have a trade on here, which is a short around this level. The reason I had the short here initially, first I like to take my trades early, but I want you to understand that there's no such thing as a perfect entry. This entry can be taken out. So in this video, I want to explain one of the things that I'm looking at when I am considering my position being unsafe. Firstly, if we go to the daily, the reason I'm short is because as part of this overall retracement, so the bigger move, we've gone into a daily fair value gap right here. We also have dynamic resistance. If I switch this on, you can see the SMA right there. So I mentioned that there might be pressure on price to go down, not permanently, it might be temporary. I don't know which one. In either case, I took a short position there. So based on the lower time frame. However, the one thing I want to point out is if you look at this low to this high, right? This is another two-step right here. Low, high, low. A, B, C. Range one, range two. If you look at that move, which ended at the 50, and then you target 100%, this is based on the steps, same steps I just showed you. That 100% gets to this green line right here, which we never reached. That doesn't mean it can't be reached. I just mean we haven't reached it right now. So one of the things I look at is price making these equal level retracements. So if we take this retracement here, from here to here, and we take this retracement from here to here, you can see that's equal. I don't know if you can see that. Okay, let me take out, right? That's an equal level retracement. Now, this is beyond the two-step. This is just additional market observation. When this happens, this tells me one of two things. The price is going to run up and potentially attack that high. So I have my entry inside this wick there. So I'm going to be watching it very, very closely. I may get taken out, break even, that's fine. But my expectation then is that if this high gets run, what do we have above it? We have the original 100% target and we have the 70. So now between this line and this line, what am I doing? I am preparing myself to hunt for another entry. So remember, point C, much larger move, point A, point B, point C. Point C always will terminate at the maximum, the 70% level. If it goes higher, it's not point C. So I'm hunting for my trade because overall, we are bearish. Overall, we are bearish. If we were overall bullish, I would be looking for longs. But right now, we are overall bearish. So in the context of the monthly, we are overall bearish. Yes, we are at the start of that move, so it might be confusing, but based on the monthly, we are overall bearish. So I am prepared for the two scenarios. One is we don't make a deeper run, and the second is we do make a deeper run. So let me show you what it looks like on the 1 hour, right? 1 hour, you see, same thing. What do you have here? This leg, this is your A to B leg, your directional move, this leg. And then what we have here now, this is a retracement. This retracement must, at maximum, terminate at the 70 fib, maximum. If it's going higher than that with a strong bullish candle, remember, I am already short from here. I was already short from here. I'm closing my trade because this on the lower time frame should terminate. It's the same sequence. The model is the same sequence. It's the same building blocks. Find the range 1. Here's your range 1. Find your range 2, which terminates at a maximum at 70, which is here. We've not got there yet, but that's the maximum. That's your point C. This is the point where you start to hunt for a trade, right? So your expectation is if you take the fib, let's say it went to the 70 and 70 was right here. So this, then you are targeting 100%. That's your targeting. Like I said, we wait for reversal. Okay, so this 1 hour is a lower time frame to the 20 hours. We already have this reversal and this move back up. So that's where you're hunting for the trade. You're looking for fair value gap. You have one here. And then you're looking for SMT. We have SMT here, but we could create another one here. That's it. That's the model in a nutshell. So I am mixing the model with commentary from what's happening on a daily basis. Things can change. News can affect price. The macros can affect price. Price can just switch and just go from bearish to bullish. The key is that the structure, the fundamentals, your model is the same. Your model isn't telling you, the model isn't telling me it's long or it's short or it's bullish or it's bearish. That's not what the model is doing. The model is simply giving me a structure to then decide how I trade, in which direction I trade, because it gives me those two ranges, one long range and one shorter range. That's it. So let's do one more thing. Let's say you were not looking at the longer or larger time frame, and you are just looking at the initial move, this one, this move here. What is this move? If we ignore everything else, right? That's not the best way because you don't ignore the overall trend. But let's say you ignore the overall trend and you were just using the model. This move from here to here, that's your directional move, right? That's your range one. What is this move coming down? That's your range two. That also is your A, B, C range. So at this point, you're hunting for what? Longs. So this is, I'm just showing you that the model works both ways. The key here is just trade management. If you apply trade management and overall trend, you're going to get the best trades. The model itself is a 50-50. That means you have to use other things to help you out. So your experience, your knowledge of your security, macros, these are things you can add on to just boost that success from 50 to 51 to 52 and higher. So right here, what are you doing? You are hunting for a long. Let's assume you wanted to go long. That would mean if you go down to the 1 hour, you're looking for the same sequence, right? You're looking for directional move and a retracement. This is not a big enough move for a directional move in the 1 hour. So you'll be looking for something like this. And then for price to come back to the 50%, and then you'll be taking a long. Now this one's a bit messy, but it's still a directional move because this bar, we never close below this bar. So technically, this is just one directional move. So really, there you have it. I will be creating another video tomorrow to keep the commentary updated every day and just to show you that the fundamental basis of what I'm doing is based on a two-step. I also do this on ES, by the way, but I like what gold is doing now, so I'm doing the videos on gold. So if you like the idea of the two-step or you just want to watch more, please like the video and subscribe, and I'll see you in the next video.